Frank Holmes is the CEO and Chief Investment Officer of U.S. Global Investors. That's NASDAQ, symbol GROW. Mr. Holmes purchased a controlling interest in U.S. Global Investors in 1989 and became the firm's Chief Investment Officer in 1999. In 2017, U.S. Global Investors made a strategic investment in Hive blockchain technologies, listed in Toronto, and Mr. Holmes was appointed as the non-executive chairman of the board, and this year, he's become the interim CEO and executive chairman of Hive. This is the first and the only publicly traded company that mines both Bitcoin and Ethereum on an industrial scale. Frank is also the author of the Frank Talk blog. It's known for its wisdom and its insight. So welcome back, Frank Holmes.
Thank you so much, and it's very kind. And the stocks have all been up substantially since the last time we met in Dallas before COVID.
Yeah, no, it's been a phenomenal run. And you really do have an insight. I've followed you for years, and it was so great meeting you when we had you the first time on the show. And what triggered that was you wrote about essentially moral democratic capitalism, how we need to allow free private equity to be more freely available to smart investors, even if they don't have the billions of dollars to their name. And I love that. And I think you really do care about the average investor, which I think is tremendous. But right now, we're looking at stock market, really everything, commodities, everything. Everything's up. Some people call it the everything bubble. And you wrote this great article, Asset Prices Are Up and Away. Where are the value buying opportunities? What do you think?
What do I think? This is a book, it's a great book that was written years ago, The Triumph of the Optimist. So it's just American to be an optimist. And so I got some other good news for you. This year I became an American by dual citizenship with Canada and the US. So I'm thrilled about being the greatest nation in the world. And it doesn't matter if there's a fight between this party and that party. It's still the most innovative country in the world. And I'm so proud to be here. And so what happens when we adapt to these things is you want to have first mover advantage. And we say in all our prospectuses, we believe that government policies are precursor to change. Thus, we track monetary fiscal policies, and you can say follow the money, where the money's going. And what you're seeing is $17 trillion between the EU, the US, and China to fight an invisible war, this invisible virus. And this is showing up in a huge asset inflation, which is then going to trickle into what should be a CPI number. But I've written about this last year, and I have a short clip on it, fake CPI number. It's not capturing energy or food. And inflation today came out and just shocked everyone.
That's absolutely true. I mean, you look at home prices, they're skyrocketing. You look at lumber prices. You know, we had a storm knock down our fence, and I'm talking to the contractor, what's it going to cost to replace the fence? It was triple. I mean, it's crazy what's going on across the board in inflation.
So the first mover advantage is buy now. You want to buy a car? Don't wait till next year. Used cars are up 25%. There's no rebates now. And so why? Metal prices that we're seeing up today are going to be pushed into the system, and 18 months from now, cars are going to have to go up 70%.
Wow, that's crazy. So you got a chart in your blog. Everything is up except precious metals. You show energy, industrial metals, agriculture, livestock, and precious metals just haven't moved that much. What's going on with that?
That's the big buying opportunity. It's always sort of bizarre when it happens, and you've got to be so suspect about governments trying to hold gold down. I believe that the G20 cartel of central bankers and finance ministers they're now on synchronized taxation. Even Yellen's coming out with synchronized taxation and regulations. Before it was trade, if you go back 20 years ago, and now it's another issue they're dealing with. Keep gold down allows the sort of the printing of money to say there's not inflation, but it's too late now. So I'm a big believer that gold is just going to have its pop. 10-year government bonds. If you can borrow a cheap mortgage, get it done now. You can borrow at various organizations like in Texas, at credit unions for less than 3%. It's a smart move because real inflation is running 10, 11%. And so I think that that's your first mover advantage. Real assets, gold will come back. It's just historically. This century, though, gold has outperformed the S&P 2.5 times. 2.5 times. So that means it's outperformed 80% of the time. So I think every time you get these sell-offs, you make sure you maintain your 10% positioning.
Yeah, no, gold has been phenomenal, and I've been in the investment world a long time. I've worked with John Templeton. We always said you keep at least a hedge in gold. It's just not moved as much. But it hasn't lost anything, and it's sitting there. I'm like you. We did a show several months ago titled Things Have Changed, and really they've gone back to 1970s policies in a lot of ways, and I expect that we'll see 1970s outcome with one minor exception, and that's what we'll talk about in the next segment, and that's the exception of this whole digital currency thing. I don't want to get into it yet, but you're kind of a pioneer in that as well.
Well, I think there's a distraction so much in political correctness. And so many young kids don't realize that political correctness in Russia is you can't say anything wrong against Putin. In China, Jack Ma was the richest guy in China, and he said something negative about the government, and he lost. It's a $4 billion speech mistake. So political correctness there is you can't say anything against the government. So I think you've got to be very careful if you say, oh, PC is a good idea. And it creates a distraction away from economics and prosperity. And so with that, I'm a big believer that innovation, by the way, I watched this series called America, The Story About Us. It's on Amazon Prime, and it's wonderful history of America. And usually, like 90% of the time, it's technology that takes us out of every downturn. It didn't matter if it was a war or it was logistics issues. It was always technology. So we are in a digital world, and there are lots of social things that we have to deal with. Some of the leading thought leaders that you have to go to is a guy named Christakis, who's a PhD from Harvard that wrote a book on networks and understanding these different types of networks, like our network of listening to each other. And these social networks. And what's happening is that we're being distracted by some of these other social networks. But there's a thought process, 6 degrees of separation that we will know someone. Well, feelings are 3 degrees of separation.
Wow. All right, so we're going to have to take a break. When we come back, I want to delve deeper into that. And I also want to talk about why gold may have been off to a small start as central banks pivot toward digital currencies. We'll be right back. Okay, well, we left off with Frank Holmes. We were talking about everything is up except the one asset that historically should be the solution to everything being up, and that's gold. I mean, gold historically has been the best inflation hedge, and we're seeing a tidal wave of inflation. Most Americans don't realize it yet. They don't recognize it, except in their gas bill, their food bill, their restaurant bill, their housing bill, the lumber bill, but it's not reported officially yet. But it's happening right now. And traditionally, gold is a great hedge against that. Well, Frank Holmes, our guest, was talking about networks and innovation and all the things that are happening. He wrote an incredible Frank Talk article. It says, gold is off to a slow start as central banks pivot towards digital currencies. Frank, tell us about digital currencies.
Well, it's really important, the social network story to share with you, because this evolves into Reddit. This GameStop caught all the imagination. This is also the digital world. So you have these new social networks, and they have their own feelings. And you've got to think of a cluster of stars. Are you in the middle of those stars of the galaxy, or are you in the outer part? And how you share information. So the idea and the concept that millennials could come in and ignite price discovery, we saw it with our JETS ETF. It goes from 40 million in assets to 4 billion. And all those millennials came in at the bottom, and Buffett gets out. Now, Buffett's just way out of, and Charlie Munger, trash talking Robinhood. We know the data that 25,000 of them bought at $12 and it went to 28. They're not stupid. Buffett got out, and then they had more than doubled. And so we're seeing these new social networks all of a sudden having an influencing factor. They've really not caught on to gold as that big important asset class, these millennials, but it's just a matter of time, because gold is like the ballast in a ship. Think of the global economic scene and that big sail out there. You need to have something so the sail doesn't tip over. Historically, it's been gold, and I think that that's not going to go away. The bigger the ship, the deeper, the heavier the ballast has to be. So I would stay very, very constructively 10% weighting. The volatility of gold is less than the S&P 500, and it is substantially less than crypto or Tesla. So when you're investing in these cryptos or Tesla, it's disruptive technology, and they're always, as early adopters, more volatile. So you have to make sure that you balance yourself. So I keep advocating a 10% weighting in gold to rebalance, a 2% weighting in digital.
Excellent. Well, let's talk digital for a bit. You mentioned Metcalfe's Law, and you put a little video on it. We'll put a link to it in our economic battle plan. But can you describe what happens when you create something like this? What does Metcalfe's Law teach us?
So Metcalfe's Law is basically says that if you limit supply and the number of interested parties trust it, then the price grows exponentially, or the users grow exponentially. And it's about trust. So if people trust gold and more people buy it, we saw the GLD allowed people to buy fractions of gold. So what we've seen with Bitcoin this time last year, and what so was profound about Bitcoin, it's capped at 21 million ounces, if you want to think of it that way. It's capped. And more people are believing and trusting it. Now, it's very hard for Buffett and Munger to grasp the concept, but as a natural resource expert in this space, I can share with you a phenomenal story. It's called diamonds. In 1947, the Oppenheimers basically formed a cartel and limited supply, like 21 million coins. That's all there's going to be. And then they started saying this intangible thing called love is verified with a diamond. That diamond was at $100. That diamond goes to $1,000. As more people trust that a diamond represents true love and a commitment, intangible to tangible, it goes up. So, that's not true. In the 60s, Oppenheimers went to Japan. They never had engagement rings. And so they got more people believing that. And how did they do it? With influencers. They did it with influencers with Madison, showing movie stars, and then other influencers where diamonds represented love. Today, we have Elon Musk being an influencer, saying that he's putting Bitcoin on his balance sheet. You have PayPal saying you can't buy a stock or an ETF on PayPal, but you can buy a fraction of Bitcoin. And by the way, my Bitcoin went from 10,000 to 50,000, so my $1,000 investment is worth 5,000. I'm going to peel off 1,000 of it to buy a new TV on Amazon or Best Buy. I don't have to go to my bank, my credit card. I do it all within PayPal. This is the digital world. And that is sort of that social network of young millennials are used to that. They're used to gaming and being superstars of gaming and earning digital money in that software. So it's very easy for them to appreciate this concept. So Metcalfe's law says we cap the supply, more users, now they can buy fractions, it grows exponentially.
You know, and what's so amazingly true about that, the trust factor that you mentioned, I mean, when they traded 10,000 Bitcoin for 2 medium-sized pizzas, there was more trust and faith in the pizza than there was in the Bitcoin. Now you look back 10 years later and you say, wow, they just spent $600 million for 2 medium pizzas. It's amazing. So your point is well taken. What are you doing? What kind of things are you doing with Bitcoin in what you've invested?
Well, I couldn't launch an ETF. I quickly recognized 4 years ago the regulators were concerned due to anti-money laundering laws they call AML. They launched, so they didn't want a hacker to get some Bitcoins, and they showed up on a New York Stock Exchange ETF. So I went to Canada, found the same thing. It was a dead end. I had this knowledge, friends of mine are gold oriented, and they said, well, they don't believe it. But I said, you know what, something real is happening here. I went to a consensus crypto conference, and Abigail Johnson, who was at that time running a couple $1 trillion Fidelity Funds group, the CFA, never attends investment conferences, is at a crypto event. She's a keynote speaker and is sold out. They're scalping tickets to get in. Something big is happening. So I said I would go into this mining company, put up $5 million, went on like an ETF and said, I'll be the chairman. And immediately institutional money came into it. It went public with 30 million. It's the fastest 5 million to 100 million I ever made on paper. And then crypto winter came in. So in that 2017 fourth quarter, we raised $200 million, built revenue cash flow, crypto collapsed, and then it's come back. That crypto window bottom when JP Morgan launched their stable coin, which is like a crypto money market fund. And then Facebook came out with Libra. So that was basically the bottom in it. Hive Blockchain was the first public company ever to mine Ethereum or Bitcoin on an industrial scale. We have an ESG footprint. We're only green energy. We have inexpensive, usually stranded electricity or cheap electricity. And so far, this past year, we're the most profitable of all the companies. And if Bitcoin went up 320% last year, Ethereum went up 500%. We went up 2,500%.
Okay, that's what's happened. That's the past. I want to talk. We have to take another break. When I come back, I want to pick that brilliant brain of yours and find out what's next, what's in the future. So we'll take a break and we'll be back with Frank Holmes. Okay, Frank, what you're talking about, you've been ahead of the curve. You were ahead of the curve on gold, you're ahead of the curve on cryptocurrencies, and we tell all of our viewers, hey, ask your advisor. Go talk to your advisor. None of this is intended as advice because Frank doesn't know what your situation is. I don't know what your situation is. So ask your advisor. We push people to do that. But find an advisor that's willing to listen to these kind of ideas and kind of thoughts and then evaluate, see if they're right for you. So Frank, you're brilliant. You hit it out of the park in gold and crypto. And we love having you as an America. America's better that you've joined us. Thanks, and Texas too is better to have you as a Texan. But what's next? What should people be looking at?
I think shipping. I think there's tremendous logistics issues, and they have pricing power. And UN pushed in environmental issues that on the oil they have and the size of their tankers. So we're seeing prices rise ninefold, and cargo airlines, they never stopped during the COVID crisis. They had tremendous pricing power. So I think we're going to, as the pent-up demand from $17 trillion is huge. Latin America was a big maker of clothes from Guess jeans. They shut down, but people need clothes. So America's been the leader in getting vaccines. So there's a high correlation. You know, I'm a guy that wears many hats, and I always chuckle about it. So I have to wear my Jets hat, and the Jets hat relates to vaccines. So as more and more people get vaccinated, then people want to travel. The business traveler is not going to start until we get about 70% double vaccinated. And so the same thing happens when I've got gold. So then I wear my gold hat. And then we're going to talk about my Hive hat. The point is that you have to have an optimism and look for where the trends are going. So I think cargo and resources are going to be a big winner in the next 3 years. And so I remain bullish on that sector. And the airlines still have another big leg as Europe comes alive because they're so way behind in getting vaccinated. Same thing in Canada. And a lot of Asia is really behind in getting vaccinated. So in the next 18 months, the vaccination is going to grow here. Now we're going to get free boosters. So I think that we're going to see this huge run. Digital Hive, I'm going to tell you about Hive's vision. Hive's vision is a $10 billion company. We're the first to mine Ethereum and Bitcoin. We're grossing today, I think we're about 500,000 a day. That's 180 million a year in revenue. We will grow 300% this year based on all the equipment we bought. We just have to get it installed. And we're buying our own assets, the data centers. What we bought in New Brunswick for $300,000, Riot just paid $2 million a megawatt. So we think that we're way ahead on that curve. We're approaching to get listed on NASDAQ. We think that'll go through a re-rating as more funds can buy it. So I'm very bullish on it. But last time when I was on your show, we talked about Grow. And, you know, Grow has been a big beneficiary of Jets. Jets was, say, $40 million. That only throws off $160,000 in revenue. Now, at $4 billion, it throws off $24 million in revenue. I haven't hired any more employees. I just keep educating. So Grow has basically gone up 8-fold since the last time we spoke. I think it's a $40 stock based on our peers. So, and it also owns a big piece of Hive. If you buy a share of Grow, you basically get almost 70 cents of Hive behind it.
Wow, Grow has grown and is growing rapidly. That's phenomenal.
So it's and I own, you know, I'm the largest shareholder, and it pays monthly dividends. So I think it's a lower volatility than buying Hive. Hive is a speculative play. It's a disruptive play. And so anyone going into it has to recognize it. But my goal is to build it to about a $10 billion company.
Wow, that's phenomenal. Well, Frank, one of the things I love, you love the American story, the American dream. You came here, became a citizen, you moved to Texas, you've built all of these things, you've seen things before they happen. Now I want to ask this, no country has ever taxed itself into prosperity, and you've got a quote from Winston Churchill. Let's switch gears a little bit. We all want to grow and be a part of that. What is the thing that concerns you that would cause you to write this article?
Well, we mentioned earlier that we always talk about government policies, and it's a binomial model, monetary or fiscal. Monetary is real interest rates after the inflation, what they're paying you, and money supply. Fiscal is tax and regulations. So we just take a look at, if you want to have a booming economy like you had under President Trump, it was drop regulations, drop taxation, booming economy. Purchasing manufacturers, and it takes off. Now Biden talks about raising the taxes. I don't think he's going to do it. I don't think it's going to go through. Otherwise, the stock market would be derailed. If interest rates are to spike up to 10%, it would derail it. So I think that the margin that the president and the Democratic Party won by is so slim. It's so slim. So if they're politically motivated, they're not going to rock this boat. And what Trump did do is funny for me, because all these millennials that voted against him, they all fell in love with the stock market because he talked about it every day. He's the only president that looked in the mirror, checked his hair, and then looked up stock prices. And that happened with the first movie on Wall Street. They thought everyone would hate Wall Street because of the first movie, but to get rich is what was the expression? Money never sleeps. And what all it did was usher in every Ivy League MBA student wanted to get into Wall Street. It did the opposite. So every millennial is now addicted to the stock market. It's a way to build my wealth. We saw that with the airlines. These kids knew more about airlines than most airline analysts did. And there's guys like Sam Chu. And I said, Sam Chu who? Sam Chu has 2.5 million followers on YouTube. And they're great content. 5-minute content updated all the time on where the best deals are, what the best airlines are. And so the world is changing. And that's why 2 weeks ago in Austin, I went and ran the half marathon so I can try to stay young physically to keep up with where these kids are going.
Well, you're certainly young mentally. You've been ahead of the curve, and you're hedged, by the way. Even if we did pass those taxes and regulations, gold does really well in those periods like it did in the 70s. But let's be optimistic. You brought up the optimism. I want to ask you, Frank, we're going to have to, we're running out of time here, but I want to ask you, we've started the National Security Investment Consultant Institute. We train financial advisors. We want them to be optimistic and believe in America. Would you join us? If we invited you, would you come and help us train advisors on the things that you've learned? We promote liberty, security, and values.
That's for sure I would. Anytime. I'm very big in my education is a big key component. We've won like 90 marketing awards, but really they're educational information. So I'm a big believer that if people are educated and informed, they just do better things in life. And I sponsor schools. I do a lot for education.
That's fantastic. All right. Well, thank you so much, Frank. We're going to provide notes and links to your Frank Talk, to your U.S. Global Investors, to JETS, to GROW in our economic battle plan. And you can get a free copy of that at economicwarroom.com. Remember, what we see as a marketplace, our enemies view as a battle space. This is Kevin Freeman from the Economic War Room.